Alright, sorry everyone. My wife's afraid of bugs. It was in fact a stink bug. Alright. So I got Boeing up here because I wanted to show something that I thought was interesting that I was watching here. So take volume off here for a second. Try to overlay this. So this is what you call bullish divergence here. Hold on. This music's too cheery. Hold on, we need something more intense. Oh my god, there's this. What is this? You want RSI different color? Hold on. Better? What's up, Dougie? Awesome. I actually kind of like that change too. So, divergence is when you have similar price action, but your indicator is not similar. So you have a divergence from the price action to the indicator. And you can use multiple of different indicators. I just want to show you with one that I find super useful. Hasib is in the house, baby. Welcome, Air Drake. Hope we're all partying tonight, having fun. Well, well, well. Oh, this. I need something. Let's. All right, hold on. Oh, this is intense. We'll let this go for a second. See how it goes. This one's. I'm feeling this. This isn't bad. Just want it to be like slightly in the background. Got a lot of famous people in the chat tonight. Hope you guys are here to learn. Or have fun. I'm cool with either. Dougie, you can always learn something, trust me. I've taught you stuff before. You use divergence much, Doug? So, I don't know, I've just used BA. It came up first. It's got a really good example of divergence. So, like even here, this is for the future, but like let's look at divergence here. So you have a lowering price but a hiring RSI. So this right here is an extreme sign of divergence. So look at this. Look at this. So you have a higher price here but a higher RSI here. This means we're reversing 100%, and that's what divergence is. I don't play BA, but BA is good for teaching. This is a little too intense, I think. Hold on. There we go. Raul, we appreciate you giving out the free stuff. I got my vaccine shot yesterday, so my shoulder is like super sore today. But yeah. So let's look at this in particular. Oops, didn't mean to do that. So divergence is when you have an indicator that is diverging from the price. So it's looking. So basically what's happening is the indicator is supposed to do the same thing as price action, but it's not, which is indicating a reversal. So what's happening here is you have lowering price action but a rising relative strength index, meaning there's a divergence from price action and relative strength index, meaning we have a bullish divergence here. So bearish price action, bullish RSI, strong indicator of reversal. And look what happened right after is you had increasing RSI, increasing price right after you had this bullish divergence. So again, and let's mark these out right here. So you have a low of right here and then a low of right here, but that low, even though the price was lower, was still higher than the most recent low of the RSI. So this was what this is triggered down to 231 and this was at 240, so almost a $10 difference, yet RSI was higher. So this actually means we have a bullish divergence indicating a reversal. So this is another tool you can use in your arsenal to, if you're unsure if something's going to reverse or if you're unsure if it's a bottom, look for divergence. I don't have like a percentage on this. I just know it's very accurate and a ton of people in our group use it. I personally don't use it as much as I should. Sometimes you get information overload, and when you look at like 30 different indicators, it's just too much. Like I try to focus on 2, 3, or 4 where I can master and be a high success rate. This is a very good one to add to your article though, or your arsenal. So divergence, if you're unfamiliar with the definition, means when there is a difference, or as they are drawing apart lines extending from a common center. So divergence is they have a common center right here, but one's going down and one's going up, thus creating divergence. Xenon, no, it's just it's allergy season. It's gonna happen. Yeah, and the vaccine obviously too, so yeah, this is literally, I just went to indicators, typed in relative strength index. It's literally the built-in relative strength index, and I'm just using it to match price action with the relative strength index. I just customize the colors to my preference, and so you can use this in combinations with a lot of things. So check this out. So I have my Elliott wave theory here where I got A, B, C, D, E. So this is telling me we have a full correction wave here, and it's at support here, and we have divergence here after earnings. So earnings held the support, and we have divergence. So you see here, again, you have the lowest RSI here with the exact same price being here. So these are the exact same price, 232.35, 232.35. But one is an RSI of 17 and the other is an RSI of 32, meaning we have bullish divergence. Thus, we have a high likelihood of a reversal here. Now, it's not 100%, nothing's 100%, but again, very strong indicator. So, another example right here. So, you have right here, look at this. You have a downward action, yet you have a wrong line. Hold on. So you have a downward price action, but upward RSI action, meaning this is almost 100% done. So downward price action, upward RSI action, and as this hit here, you have divergence, meaning this is going to reverse, and then look what happened. My brother is not covering for me, and his voice does not sound the same. I love my brother, but he's not as talented in the stock world. I'm still training him. One day he will be. Should we try it out on SPY, or should we try it out on futures? Let's just use it on futures and see what's happening. So I'm on the 1 hour. We'll look on the S&P 500 futures. There's also a bearish. Let's get rid of everything. So let's see here. So right now we still have downward RSI action on here. So if this were to come down here and the RSI would be higher, that would be bullish divergence. Let's see if we can locate some stuff here. Here. Just trying to look for an obvious. They're not always obvious. This is only so useful, but it is another tool in your arsenal, so keep that in mind. So you want to look for similar price action that you can find. So let's see here. So you got this price here and this price here. So you have the same price action, downward price action here. While it looks really good, you know, this is a high and this is a low, so I guess those aren't apples to apples. You usually want highs and highs or lows and lows, but this does tell you, while the similar price action, that this price action isn't to be believed, and then that's why it went down, because of that price action. This divergence isn't really good either. Maybe futures isn't the one to do it on. It kind of is all over the place. Let's try SPY. Maybe SPY will be better. I've never tried it on futures, to be honest with you. Here's a good one. Okay. Here's a good one. So you got a similar price action here, and you got similar price action here. Okay, so you got similar price action in these two zones, but you have a rising RSI. So this RSI is higher than this RSI. That would be bullish divergence right here. Or wait, no. Hold on. There you go. So this RSI at 4073 is higher than 36. That's meaning you have bullish divergence right here. And you can use this on smaller time frames usually. So for instance here, you had a 70, and for here you had a 66. And you had similar price actions here. So this was a confirmed double top, and you had bearish divergence, meaning you had lower RSI here than here. So the strength of this is higher here and lower here, meaning this run is not to be as much believed as this rise here. So that's where you got this bearish divergence here. Qs? Alright, thank you for that suggestion. So we have 3 marks right here we can look at. We can look at the here, so if you look at these 3 spots here, you can see we have here RSI 37, here 35. Very similar, not any divergence, but on this last ticker where you have the exact same price action, you can see the wick goes down, and you can see that the ending is 45. Much divergence over this old one. 34 to 45. The Qs look really good for Monday based on this ending candle because of the bullish divergence. Also, you have a couple other things. So combined with other factors, so obviously you have a bullish tweezers here. So you had a rounding bottom price action. It came all the way down, but then got bought up, and then we ended up here. So this is not engulfing, but this is a bullish tweezers, and with the RSI looks very, very strong going into Monday. And if you look at futures, I haven't looked at futures for a few hours, but I think futures are looking okay. Nothing fantastic, I would say, but futures are looking okay still. So futures are still green. Still looking good for Monday. Everything's up at least 0.2%. Small caps looking good. VIX is down. But, you know, you can see a couple of different bearish divergence. That one's not a good example. But here's some good examples on this flat top right here. So if we look with these lined up, so you have pretty much similar price action. So the price is staying the same, but the RSI is falling. So when the relative strength is falling and the price is staying the same, that means we're probably going down. And that's exactly what happened, and it happened in very fast, very epic fashion. Yeah, it's just another way of looking at things. Some people like it, some people don't. I just wanted to show you using different indicators versus price action. You could see some different things. And again, here's a bullish divergence here. So you're seeing from here to here. So if we look across here, so very similar price action, yet RSI continues to get higher, signaling that the buying pressure is increasing even though the price is staying the same. RSI is going higher, and then boom, we get this huge bullish wave right here, and futures slash tech takes off. So if this were to have been falling, then we would have been bearish. So, and again here you have this candle right here is lower than here, or let's say right here is very similar, yet the RSI is higher here. So even though this was down, the RSI was still higher than the same price action, thus indicating a reversal. The time frame, this is universal. So if we're looking at the 15-minute, the time frame you can compare is much smaller than if you were to look at, say, a 4-hour or daily. So with any indicator, with anything you're looking at, whatever candle's time frame you're looking at, you have to keep that in comparison. So if you're looking at a 15-minute, it's only relevant in a short time period. When you're looking at a daily, it's relevant on a longer time period. So if you like swinging, if you like swing trading, you should be looking at the 4-hour or the daily. Daily candles can tell you a ton. So on futures here, you have a double top, and you kind of have a diamond forming, but you do have it could be a morning star there. Not sure because it's still forming. You got lots of time here. I will say, based on the daily, this isn't amazing looking. But based on the 4-hour, you could say this has a cup and handle. It's all based on the candlesticks we look at. So maybe short term, this is bullish for the week, but maybe on a longer term, on the daily, it's bearish. Maybe say 2 weeks. So I mean, again, here you got bearish divergence here, so you have similar price action but much lower RSI on the daily, so that's not good. So similar price action with much lower RSI means we're probably still going down more, so you might see something like this. I'm not saying this is going to happen, this is just based on divergence. Might see something like this, and we might trade sideways for a while. May is very much a consolidation month, and you see portfolio rebalancing, and it's just not a great month to trade. And I'm really sorry to tell you that, but overall, May is not a great month to trade. So hold your money tight to your chest, make quick plays, be very careful this month. Please. Alright, what should we drink now? Actually, I got this 30-year-old aged rum. It's been aged for 30 years in bourbon casks. It's the most expensive rum I've ever bought. I'm going to try it. Yeah, Iron Condors, selling premium in May is a great idea. I expect May to be a very low volume, very unfun month. I'm just gonna be honest. We're gonna make the best of it though. So I'm gonna be playing high volume tickers. It's one of the reasons why we rushed out the relative volume scanners and relative volume command, is because we want you guys to have the tools to be successful in May. It's one of the reasons why I rolled out the leap commands and the long-term investing commands, is because day trading could be slightly unfun and swing trading could be slightly unfun. We're gonna have a lot of chop. So cash, I won't know till the end of the week. It picks automatically. So yeah. So let's do some charting. We can use some divergence in there or not. What are some tickers that you guys want to look at? I heard what was it? VRTX was a big one that people wanted. Vertex Pharmaceutical. Was that one people wanted? That doesn't look really good, if I'm being honest with you. It looks pretty bearish. Thanks, Cash. Oh yeah, let's do CVS. Let's do FedEx. We'll do all those. So we'll do those in order. CVS and then FedEx. I think I have. Yeah, I have CVS charted because I almost put it in the newsletter. So this one should be fairly simple. So I'm pretty stupid bullish on this. So I think it could hit 78 going into earnings, and I think after earnings it might see a small decrease. But I expect this to go 82 up to 84 this week. I am a Super Bowl, so I'm very it does have bearish divergence when you're looking at this though. Not a great sign, but again, news trumps TA, so the earnings will invalidate any TA. So if earnings are great, we're going to see 82. If earnings are amazing, we're going to see 84. 87 mark I have up here is probably really, really long term, but I think 78 to 80 is very doable, with 82 to 84 being our high target. I don't even know what HOL is. Sounds like a made-up ticker. That looks ridiculous. Why are you even playing this? Helicity? What? No, this thing's going to 0. Alright, FedEx. Ooh, FedEx looks so good. Don't love that candle. Stop trying to pump a stock that you know is terrible. Dan's probably hanging out with all of his lady friends tonight. Digging this song. This is nice. Good charting music. Alright, so check this out. You got bullish divergence between these 2 points. So I'm going to point this out and teach the class here. So you have RSI of 50 here and an RSI of 65 here. Same exact candle, same exact price action. Obviously this one's green and this one's red. That is bullish divergence. That is a very good sign going forward. Yeah, we can do Netflix. Don't worry. I like Netflix, by the way. I think you're going to like my analysis of Netflix if you're bull. So, for me, like, I'm looking at this, and I see a cup and handle. And I mean, that's just me. But, I mean, I see the handle being right here, the cup being right here. So, let me draw this out. So, got your handle. Got your handle. Got your cup. So there's your cup and handle, and then obviously you have a breakaway gap, and then a huge green dick candle. Like, this is a massive candle for FedEx. And then you have an inside day. This is bullish, believe it or not. Even though it's a bad day, this is a bullish indicator. So let me look into this real quick. So when you have an inside candle, that means it fails to break the bottom, fails to break the top. So it's a consolidation candle, and so what you're probably gonna get is another consolidation candle tomorrow, maybe even Wednesday. But in the long run, this will break out probably to 296, and most likely this will retest all-time highs. Fundamentally, FedEx should be up here. There's nothing wrong with FedEx fundamentals. And FedEx is only getting stronger. FedEx should be probably a $350 target by the end of the year. And let's go into that. I know people have been asking for that. So when you're looking at, when you combine fundamentals to back up your technical analysis, it's very powerful. So let me repeat that. When you combine fundamentals to back your technical analysis, it's very powerful, and I try to do that as much as possible. So you can't just go straight up all the time. People take profits. You have to keep in mind there's this psychology. When people make a lot of money, they're going to take profits. So if something runs a lot, that's why you get this. That's why Elliott waves are what they are, because they go with the psychology of taking profits and then buying back in. So let's look at the financials here. Let's go quarterly. It's got an EPS of 11.46. That is insanely undervalued. Let's look at the current. So the current EPS is 22.5. The yearly EPS is lower, but the quarterly one is what we want to look at. So quarterly, 22.5. Keep in mind that the S&P 500 has an EPS of 38. It's like 36 or 38 right now. So this is 50% undervalued compared to the market. So technically, if this was relative to SPY, it should be a $450 ticker. Boom, right there. I'm bullish on it just on a fundamental standpoint. Anything under 30 that has high growth revenues and the chart supports it, I'm instantly bullish on. So, boom, just based on EPS alone, I mean, if you want to look, cash flow is always super important. So, cash flow positive. So, net positive year to date, 3.8 billion positive cash flow. Don't worry about it. They're fine. Debt to assets, they have 83 billion in assets, 60 billion in debts. They're perfectly fine. Let's look at their quick ratio. Quick ratio and current ratio could be better, but they're not bad. And this is probably what's hurting them a little bit, is they have a lot of debt, and so their long-term growth, because of the debt margins, because of their quick and current ratios, I could see that. Enterprise EBITDA, you want that around, it could be better. You want that between 3 and 10, and it's in there, so we're good there. Book share value, this is insanely high, and it's probably because of their debt. You want that really ideally around 3 to 4. So this is their book value per share is much higher, and that's probably again what's hurting them. Or some of these small things like that, but overall, I'm not worried. Shipping is only going to increase. It's never going to go away. So FedEx should continue to be a strong leader, as well as UPS. And I would say 305, 306 in the next couple weeks. Very strong possibility of that. So if you're long on FedEx, do not worry. You will be okay, most likely. No promises. Alright, Kool-Aid. Let's go Netflix. And then let's look at ARVL right after. So Netflix, bad earnings projections, but still in the zone. So what happened was Netflix, I think, if I recall correctly, had smashed out phenomenal earnings, but their guidance and their new subscribers was a little weak. I think they're getting hurt by all the new streaming services, and the fact that people are pulling content from Netflix. So Viacom, Disney, NBC, like all these companies want their own streaming services, and they don't want Netflix to have it. So when Netflix's contracts dry up, Netflix is going to be stuck with just original broadcasting. But Netflix has been preparing for this by building their library out for years and years and years. They will still have a strong library and a strong content library. This is where Disney Plus, the reason why Disney is so successful is they have the best content library of all streaming services, in my opinion. The best IPs. While they don't have as much content, they have the intellectual property to create the best content. So owning what they own will keep Disney relevant for the next 10 years, which is why I'm extremely bullish on Disney earnings, and we're going to look at Disney tonight. So I'm really looking forward to Disney earnings this week to see how those play out. I think they're going to be amazing. How the market responds will be interesting. Typically, Disney market, it's been hit or miss. So I would not play Disney, but I would be very bullish on Disney long term. So if you wanted shares of Disney right now, perfectly fine with playing shares. If you were to play weekly calls, that's a risk. So Nathan, you're very correct, which is why, Nathan, I am super bullish on Viacom long term. I think Viacom right now is one of the best stocks to buy leaps in long term on. I don't normally recommend things to my parents. I recommend Viacom to my dad today. I said, look at Viacom. They're at a super attractive price point right now, and they could easily be worth double what they are this time next year. So Viacom is a buy low, low risk stock right now. So, alright, Disney, very strong candle, very strong. If Disney gets over 15, 16, get a couple of weeks out, 550, 500 calls in the money. They'll be expensive, but you will make money. Get a 500 call, June 500 call. You will make money if it gets over 516. So once it breaks this over here, it's gonna probably work its way back up, and probably I would imagine if Netflix keeps it up. Here's the other thing to consider. So check this out. So look at this. So Netflix is in a wave 4 right now. Netflix is probably going to 700 to 800 in the next couple of years. So you got a 1, 2, 3, 4, 5. So Netflix is probably going to 800. We can measure this out. It's not rocket science. Yep, I got 800 exactly. So Netflix is going to 800. Let's call it. It's going to happen. Let's just call it what it is. When it's going to do it could take 2 years. It's probably not going to do it this year. I'm just saying the next 2 years, probably going to happen. There you go. Almost got it perfect. June of next year. So in the next year and a half, Netflix will be 800. You heard it here. So alright, I just pumped Viacom a lot, so let's talk about this. So Viacom, for the longest time was in the 48 to 70 area, and then recently hit 102 because Archipelagos is stupid. But this provides us with a wonderful buying opportunity. They are pivoting. They have good content. They own Showtime. So don't think Viacom doesn't own good content. Showtime and CBS, very good content. Very strong portfolio. So now it is possible, and keep this in mind, they have earnings this week. So earnings will tell the tale. If earnings are good and this can get above 44, you have to buy this. It's not a recommendation. I just like the stock, but God, this looks so sexy long term. Like, this is a gift right here. The fact that this fell this far and it's still heating the uptrend, it's a gift. They own The Office, yes. They own a F ton of IP, and they're only making more. So take out a full mortgage on your house and buy the stock. No, don't do that. I'm kidding. I'm going to go back up and read through some of the tickers here. Give me a second. Oracle's one I'd like to cover, actually. So I've been covering Oracle for a few weeks now. We played the shit out of the shorts. Made a lot of money on this backdrop. You can see it tapped the correction area. So it just tapped in here and then bounced hard. So I'm bullish on Oracle. And I had talked about this in the Discord. I was like, I think Oracle is done correcting, like right here. And I almost went in when it was 74. But I was a little gun shy. But last time it did this, it ran really hard. And it continues to run hard. Oracle is still fundamentally super undervalued. Oracle is easily a $100 stock. It should be a $100 stock in my opinion, but it ran it got up to an 80 RSI. It needed to cool down. and we took full advantage of that and made 1,200%, 1,500% on these downtrends. People made really good money. I made really good money. We were all very happy. So, but if you look into the fundamentals of Oracle, it's still extremely undervalued, even though, like, you see these huge runs and people are afraid to play near all-time highs, and it's because they don't do the other proper research. When you do the proper research and you look into the fundamentals, then you could take advantage of people's fears. And when you're greedy, when people are fearful, you make a lot of money. And when you're fearful, when people are greedy, you don't lose money. So keep that in mind. And I'm going to show you this. So let's look at the financials. So let's look in the quarterly. Yearly EPS, a 4. By that estimate, it should be a fucking $400 stock. Excuse my French. Alright, let's look at quarterly estimates. So price to earning ratio, 15.4. Keep in mind, SPY is a 38 EPS right now. This should easily be double what it's worth. Oracle is extremely undervalued right now. Now, let's look into other things. Why is it undervalued from an EPS standpoint? Is there other things in the fundamentals that come into play? Enterprise value, in line with where it should be. Balance sheet, book value, extremely undervalued. I told you before, a book value should be between 1 and 4 if you want to go long on it. This is at a 3.07. Perfect time to go long on it. So, if you want to look at like a 100 call Viacom leak 2 years out, I would not be opposed to that. So, income statement, $10 billion in revenue, $5 billion in net income, extremely profitable. Balance sheet is probably which gets them a little in trouble. They took on a ton of debt recently. So they went from, so they have 18 billion in assets to 108 liabilities. I think this is where the fear comes in, because their quick and current ratios are not great. So ideally, hold on 1 second. Just gonna look something up here so I don't say this wrong. Having a brain fart here. Okay, so I couldn't remember. I just had a huge brain fart, but okay. So the higher the quick ratio, the higher the current ratio, the better. So they can, a 3 quick ratio, a 3 current ratio, they can instantly pay their debt literally tomorrow if they wanted to. But debt is a good thing. So I'm not seeing where the disconnect is and why Oracle isn't higher. I think it's just going to take, I'm going to be bullish on it probably all year until it is about 120, 140 share. Look at this. This is literally a straight line up in earnings. They have beaten earnings every quarter, the last 4 quarters. Now, here's the only other thing I would say is their total revenue has not really changed. Annually, it's not really changed. They're just getting more efficient. So that is something to be concerned about, is they're not growing revenue-wise. But money-wise and efficiency-wise, they are growing, which is good. So keep this in mind. Near all-time highs, still am a fan of the stock. Okay, moving on. I'll do another about 15 minutes because I started late today. ARVL. Oh yes, I am balls deep in this right now. Full disclosure. Really deep in ARVL right now. So keep that in mind. Okay, so you have bullish divergence here, really good. So you got similar price action here, similar price action here. You can see RSI is extremely high here compared to here. Bullish divergence, looking really good. You got a cup forming right now. Oh wow, it's actually showing me all the back data. Okay, so Arrival. Let's talk about Arrival. What makes Arrival attractive? If you're not familiar with Arrival, their financials are terrible. So we cannot look fundamentally into Arrival. They just don't have a history. So, I mean, there's nothing really. Their quick ratio and current ratios is all we really care about. And they look really good. So let's look into that. Cash flow, not awesome. I mean, they're probably going to have to do an offering that is what we're concerned about. I think it's going to come right in here. This would be the most ideal place for them to offer. So why is Arrival on my radar? Why has it been on my radar? Why have we been on it since $15? Because of Biden. So Biden has been talking about how the U.S. has been lagging in electric buses and electric freight carriers, basically electric vans, basically UPS, FedEx, the U.S. Postal Service. He wants them to be all electric eventually is his goal. So why is Arrival better than Workhorse? So they're very similar because Arrival has a paid contract from the UPS for $1.2 billion worth of electric vans, with an additional 10,000 able to order. They have a fully functional prototype, something that works. They are building 4 different factories around the globe. Everything is there for them to be successful, and they're going to get more contracts if the UPS thing works out. So I am very big on Arrival. It is one of my favorite electric vehicle companies long term, and the call flow is insane on it. Like, if you look into the open interest and volume of call flow on Arrival, like, massive money is pouring into this stock. And that's what alerted me to it in the first place, was the smart money is dumping hundreds of $1 million into the stock. So we need to pay attention to it. I believe they are supposed to be delivering by the end of next year. Let me just Google that UPS ARVL contract. So they ordered 10,000 vans, which will go in production next year, and they will deliver at the end of next year. So, oh, that's annoying. So they should go in production early next year, and so Arrival actually was an OTC stock, and it IPO'd right here. This was actually their IPO day, I believe May 12th. And so this is all OTC back here, so don't worry about this. What you need to be concerned with is this, right? This is all you should be concerned about. This is actually on the NASDAQ. This is all their only history. The rest is back. So, I don't see this being higher than like a $30 stock. I want to point that out. I'm bullish on it now, but if it goes to 30, I'm out. I'm probably out at 25. If it goes to 25, I'm out, because I'll make good money. I'm in a lot of calls on this right now, but at 25, between 25 and 30, I'm out. So no, Arrival is not a SPAC. It is. Is it? No, I'm pretty sure it's not anymore. Yeah, no, it's not. It was a SPAC, but now it's public. I think is the thing. I would probably need to do you probably need to do a little more research in it, but I'm looking really good. Okay. Ah, Dan, you're here. Aren't you having fun with your Angie friend? By the way, I'm drinking a 30-year-old rum tonight, Dan, so cheers. I've been looking into weed lately. Really liking weed lately. So weed has also had a bullish divergence. It's also bear flagging. I talked about ACB for the week, and we played it. We made money. We should have played it more. So it's had this inverse head and shoulders. It's got this bull flag right here. Weed looks really good. Really excited to see. I think CGC has its earnings this week, or Tilray has its earnings this. Who has their earnings this week? Not ACB. I guess it's 2 weeks from now. Is it growing? Nope. It's 2 weeks from now we get weed earnings. Alright. Fair enough. I am a fan of weed. I think weed's going to be good. I am also super fan of weed long term. CGC is my favorite. I also really like Tilray. Those would probably be the two go-tos. I am been a long bear on ACB. So ACB is like the American Airlines of weed, if that makes any sense. So it is the most risky of the stocks, but it has the most upside. So ACB has the most upside of all stocks. The problem with it is it has the most debt, and it's financially the worst of all of the stocks. So if they can streamline their business and become cash flow positive, ACB has the most upside of all of the weed stocks. I'm drinking a Zafra Master Series 30 year. Typed it out for you. So, as much, and it was like when we were bullish on airlines, when I made the video of airlines or mid last year, about this time last year, I said buy airlines, and American Airlines was $10. Love was I think like 27, and I said buy airlines, and I said here are the ones you need to look at. It was Spirit Airlines, it was Love, it was Delta were my favorites. It was right here. I said buy Love. Love went from 30 to 62. You would be extremely profitable if you listen to me. And I said buy Spirit Airlines was my favorite, and Spirit went from 15 up to 40, 3-to-1 return. And I said American Airlines was your lotto, and American Airlines was $10, and it went up to 26. So all of them insane picks last year. Hope you rode those. Hope you made money. So again, I almost put this in the newsletter, so I want to cover it. XOP. You got bullish divergence here. It's at support. I'm looking. The thing with XOP is all the stocks that make it up have their earnings this week. So I don't know if you should play it this week, but I think you should pay attention to it. This is what I think is going to happen. So I have a feeling it's going to come down tomorrow, and then it's going to do one of these things, and then it's going to do this. So if you look at this, you're looking at, here's your left shoulder, got your head, and it's going to make that right shoulder here, and it's going to do a double top, which is then going to make a cup, then it's going to make the handle, and then it's going to go nuts. So pay attention to XOP. Put it on your radar. Really put it on your radar. So I also have CLNY. I want to point out CLNY. So why is CLNY important? CLNY is my number one short squeeze right now. Frank, I'm there with you on LVS. LVS is at the top of my list because of the reasons you just said. LVS has crazy call flow, like stupid call flow. And so I looked at it really, really, really hard. I know there's something in my brain that, like, playing gambling stocks right now when they're so non-profitable, it's hard for me. But I get it. The call flow supports it. But let me talk CLNY here real quick. Let me see if I can pull this up here and show you. Let me see if I can switch my windows here. I don't know how to do that. Hold on. Oh, that didn't work at all. I just broke it. Oh, broke my stream. I'm gonna try to fix this. Hold on one second. Alright, there we go. Alright, fixed it. Alright, so this is CLNY. It's got a 16.6 short interest ratio, 14.5% of float. The short actually increased 12% on Friday, and it didn't go down. So you got a huge, you got 68,000 shares shorted. It's got a market cap of 3.4. It's got good average volume. So the average volume is 25% or 33% higher than the average. We're looking really good on this. So let's see if I can get this. Why isn't? Oh, there we go. Alright. Alright, got it working again. Glad that worked out. Alright, let's look at XLV. I know some people were curious about that with the Super Fortuna call. So let's look into this. Alright, this is SLV. XLV. Alright. XLV. Alright, so we're on the daily here. Pull this up on the, let's go 2 hour. Alright, so you got a clear downtrend here. So it's like, why did Super Fortuna call us out? So you got similar price actions here, but you got a rising RSI. So this is rising, similar price at 1, 2, 3, 1, 2, 3, all similar price actions, but RSI is rising, indicating a bullish reversal here. And I will tell you that Fortuna does not include Divergence in it, but it is something that I'm actually looking to work into it to make it more accurate. So keep in mind that is on the horizon. I'm actually really liking the idea of potentially including that. So Fortuna's a predictive indicator. Keep in mind, it's not a reactive indicator. It's one of the only things out there that is to predict price reversals. That's the whole purpose of it, is to catch huge price reversals. So it's predictive to catch the bottom. So we're looking at a bullish divergence. You have a red candle. This is not a great closing candle, but it's still, this candle is still the candle to beat. So until we get below this candle of 121, doesn't matter. Here's what matters though. Healthcare, all of the huge companies have earnings this week. CVS, UNH, CI, Anthem, all the ones that make up J&J. I think J&J. Let me look, hold on. Oh, J&J just had it. Sorry, J&J did really good. I actually really like J&J right now. Because the earnings were really good, and because it's almost at pre-price, and because and their vaccine had good news. I will point out that they have bearish divergence right now, so now is not the exact time to go in, and I think it's probably gonna go down to 159. But if it bounces here, I could see easily that easily. Alright. Yeah, ZOM, very similar. Pretty good earnings. Kind of got this cup action going. I could see this easily going back to 63. I'm very bullish on energy this next week. Very bullish on energy. Over the next in May in particular, I think energy is a wonderful group of stocks to pay attention to. Okay, ChargePoint. I know people think I'm in this. I am in this. You got a nice little bull pennant. You got some bearish divergence here, or bullish divergence. So you got similar price action here. Down in so similar price action 41, similar price action 55. High probability this thing goes back to 32. Gonna be fine. Alright, Tatum Tots. Ooh. Neat. I should have listened to you. You told me about this. You told me, and we even charted it out together. We're like, hey, check out this falling wedge, and we got this reversal here. So you had bullish divergence here, similar price action, rising RSI. Was an easy win. I think you're going to be great on this. Knee Energies should minimum retest 79.68, so should retest this right here. So you can see this was old support. So 1, 2, 3, 4, 5 supports. This is probably going to be resistance. So I have a feeling you'll probably see something like this maybe. This would be my guess for knee. So it's going to retest 81 eventually, but it's going to reject around 79.50. I'm almost positive of it. It's gonna fail there. There's too much resistance there for it to go through the first time, and so it will then retest this support. So you have these old resistances. Those will probably turn support, and that's why I did that like that. XLUT. U. Oh my goodness. 1, 2, 3, 4. You got a 5-wave, 5th wave going on right now. You have a double top cup and handle almost looking. XLU looks really good. Let me hold on. Let me do a couple. Man, I have a lot of. Okay, so XLU. What are the top holdings in XLU? Let's be a second here. Of course, Next Era Energy, Duke Energy, makes perfect sense. Energy, like it. Thank you, Tatum. Alright, I'm winding down here. I'm getting a little burned out. Loving the night, loving the company. Thank you all for being here. But I'm going to do a couple more, and then we're going to call her a night. So, I want to highlight something real quick here. I was looking at this the other day. I do think Walmart is still actionable. I know I called this out on my Twitter. It bounced perfectly at our support line 3 times, and it's got a bull flag happening right now. So I think the timetable is a little construed now, but I still like Walmart to go to 147 eventually. But Walmart takes fucking forever to do anything, so I have a feeling it's probably going to take into the end of May now for it to happen. But if you wanted to get some shares or month out calls, I think Walmart looks really good. So just wanted to point that out. Oh, of course, I do this for you guys. Microsoft looks really bad. This red candle is not going anywhere. I fully expect Microsoft to come back down to the 240s area. And that's all I'm going to say about that. Ozone looks like it's making a Head and Shoulders. So I would expect it to kind of do one of these. Quite possible it holds this uptrend. We'll see. I'm just gonna Josh. Yeah, we'll do CIA real quick. MRO, Marathon Oil Company. Double bottom looks like it's making the Wu-Tang, if I'm being honest with you. So the Wu-Tang is the W, also known as a double bottom. I expect that to retest 13. Alright, I'm just kind of pounding out these real quick instead of going deep diving. We're going to round out the night. So looking at this, I'm concerned that we have a rounded top. So why is this fucking not happening? Alright, so problem with this, I'm concerned it's a rounded top. So the fire cycle was super bearish. I don't disagree. You have a very high RSI. Let's see, we have RSI is about the same on the price level. Bearish divergence from right here. I expect JPM to consolidate more, probably to 146. I would not be bullish on it right now. Wells Fargo. Wells Fargo doesn't look as bad. Wells Fargo's had a huge run. Wells Fargo is also at insane resistance. I expect Wells Fargo to probably come back down to the 37 area. So Wells Fargo's run is done. It's done the 1, 2, 3, 4, 5. So it's done the 1, 2, made a full run. 1, 2, 3, 4, 5. So Wells Fargo's done. Wells Fargo will most likely retrace back down now. I would not be very good on banks. I would be wary on banks. Yeah, Wells Fargo will probably come back down to 36, so it'll probably do one of these. That would be my Wells Fargo prediction. All right, let's talk about CAA. And this will be my last stock of the night. Let's do Fastlar real quick because I know people are in Fastlar. Okay, Fastlar, and then we'll do CAA, and then I'm done. All right, so Fastlar. Let's talk about it. Fastlar, huge, the number one thin film solar manufacturer in the world, only worth $8 billion. This company could explode with Biden's clean energy policy. This is the number one benefactor from Biden's clean energy policy. If he really goes into solar. So, what's going on? Why did it sell off? It had earnings. Earnings weren't even bad. So here's what happened. So earnings were fantastic. EPS of 5. Like earnings are it is so undervalued even on its earnings right now. And the future is so bright. Like Fastlar is an insane value right now. All of solar is. Like solar sold off. It is fair I think it's fair valued right now. But based on their current money intakes. So there's two stocks right now that I just absolutely love in solar. Fastlar first solar, number 1, and then SunPower number 2, hands down. Those are the two best. So it's because their cash flow isn't fantastic. So it could be better, but their book value could be better. There's a lot of things that could be better, but overall, quick ratio, current ratio, fantastic. Balance sheet could be better, not bad. Cash flow, negative, not great, could be better. But overall, all the other check marks, it's because they're spending more money because they have to expand right now. So their debt to assets is going down. But their total assets is going up, and their revenue, while not going up, will go up based on future contracts. So this is not a what they have done in the past. This is a what they could do in the future. So they are at the point where they're at major support right now. Major support. So it's a buy the knife right now. Easily could go down to 75, but I strongly, last time this kind of thing happened, look what happened on the last time it hit the zone. So it hit 75 and immediately rocketed to 86 within 2 days. So I expect the selling to go, it's at pretty much all-time low for RSI. I think all-time low is 10, but I mean, RSI is at 18 right now. And it needed a cool off. It was really high. It was at 80. Anything over 80 is always a short, almost immediately for me. So, it's bottoming out. Give it a week. By the end of the week, this will look really good. Alright. This is just TradingView. I'm just using TradingView. This is the desktop app, so. Alright. Do I have Facebook charted? Kind of. Alright, Facebook is going to 400. Granted, that may take a while. Alright, so I got Facebook to 400 by the end of the year. So by the end of the year, by Christmas, Facebook will be at 400. So Facebook has insane RSI right now. It needs to cool down. And I fully predict Facebook will be red maybe Monday or Tuesday, but by the end of the week, it could easily be at 335, 340. So you'll see RSI probably hit here, probably red tomorrow, but pretty sure Facebook will be 340 by the end of the week. So don't be discouraged about that. Yeah, it's all in TradingView. I use everything is in TradingView. Alright. CIA, and then we're done with the night. Why CIA? And this is a very unusual stock. And there's a very clear reason for it. This is the number one short ratio stock in the market right now. So this has a 68 days to cover. So basically, based on average volume, shorts have 68 days to cover on this stock. And so it's interesting from that prospect because it's not really gone down at all this year. So shorts aren't making money. So why is this so shorted? I honestly don't. I'm not quite sure. The total revenue to net income, not great, but they're making money, I think. I get it. I mean, they have no quick ratio. Their enterprise value, basically where they're at. Their cash flow, they have net cash flow. Balance sheet isn't great. Book value's decent. The big thing is total assets are increasing. Income is increasing. So, they lose money, but they're getting better. So it's just interesting from that prospect that you have bullish divergence as well. Basically, looks like it's curling back up. Put it on your list. It is a small cap stock. It is a 292 million cap stock. Average volume is double what it normally is, so that's also something to keep in mind. But they only trade about 70,000 to 100,000 shares a day. So keep that in mind. Oh, what happened? Yeah, if you want this playlist, it's right here. Sorry, well, either way, thank you all for the night. My software seems to have crashed. I was going to be done anyways, but we've been going for about an hour and a half. Been a long class tonight. Hope you all have a wonderful evening. And if you liked what I did, please give me a thumbs up. Give me a like. It helps. And I will see you all tomorrow, and hopefully we can make some money.